is, there has been a big impact in the housing market. A lot of sales, sales are up, rates are down. So it's a good time to buy, the regular, person who's going to live in the property, but also for investors who are doing fix and flips. They're buying properties, fix them, and then, there is a lot of people buying. So that's what's, it's is driving the market right now. But also some of the investors, are saying that it's going to be a renter's market next year because, some people lost their job, people is not going to be able to qualify, for a regular loan. So people is going to start renting. So that's one of the things that we're seeing. I'm doing a lot of, loans for people who are buying these properties for rent. And the other thing is, there is not a lot of inventory in the market. So the flippers who are looking for the best deals, they're not finding because there is no spread, but there is a spread, for those investors who are doing rentals because, you don't need a big spread. You need 15-20%. But as an investor to do flips, you need more than that because you need to cover all the closing costs and the realtors at the end. So that's what, it's driving the market right now. And everybody's busy. I know the residential side is busy because they're doing all these refinances with low rates. The appraisers, they're very busy. It's taking longer for us to get an appraiser to go and do, a fix and flip loan. So everything is moving, in a good pace right now, but we don't know what the next year is going to be. But, like I say, it's right now the market is moving as we're going to be, a rental market next year. So that's, something that we're doing as we speak,
Put myself on unmute myself. So definitely thank you so much because it is something that we're hearing a lot about forbearance properties. We're hearing a lot about opportunities that's coming up in the marketplace, especially with with COVID, where many millions, oops, hold on one second. My little camera fell. All right. So this
That's
is
what happened with your life, right?
I know. This is exactly what I was talking about when we're talking about 2020. See, it's not over yet. But yeah, what I was trying to tell you guys is that, there's a lot of people, millions of Americans that are not making their mortgage. And what happens with the lending industry is that they're not going to lose money, right? They're not going to lose money. And that's one of the biggest things that I end up that I always tell people is that the banks are not always your friend. All right. They're not looking forward to helping you out. They're not going to do that unless they're going to make money. And I can tell you that because I get on the phone with a lot of people that are looking for funding, that are looking for clients, or that are looking for any type of money. Okay. And the first thing that they tell me is, how am I supposed to prove my income, Jose, if my business has been closed for the last 3 months? It's like, and then I keep telling them, well, the lenders want you to be able to make those payments. And that goes along with hard money loans, that goes along with term loans, lines of credit. And they don't necessarily care as to what has happened in the last 3 months. If you're not making money, that's going to be an issue. And that's the part where we want to make sure that we help you. And that's why we're here, because how do we prepare for the financing, right? So one of the things I want to ask you, Antonio, is what kind of deals can we still do? Oh, let me go ahead and put this mute. All right. If you guys, right. This is called our 2020 Zoom live. If you guys, can go ahead and do me a favor, and if you're not on mute yourself, please, just so we can so we can go ahead. And I'm going to try and do my best to mute everyone, but if not, just go ahead and mute yourself. But anyways, Antonio, what kind of deals can we still do? What are some of the deals that we can work on right now that you would recommend to get started right now? And then, for the next upcoming, I guess in the next couple of months. Oh, I think you're on mute. I can't hear you. Yeah, you're on mute. Let me see if I can unmute you.
You mute me?
Yeah. All righty, we can hear you now.
Okay. So one of the things, that is happening, and talking to other investors, like you said, I'm talking to people every day, investors, hard money lenders, wholesalers. So everybody, is putting their input, so this is not my information that I created, let's say, this is what I've been hearing, in the market. So, what some of the experts says is that, small quick flips, are going to be better for, to make money. So you can make, let's say, 3 flips, 4 flips in a year. And if you make 20, 30,000, you're still making 100,000 instead of doing, a $300,000 deal that you're going to make, 50 or 90,000, but it's going to take you more time. So, the other thing is, the rentals is still, it's a good market. I have investors who are buying, 3, 5 properties. I have an investor who, bought, I think 3 properties in the last month, and he's fixing them and is going to rent them. So, that's what he's seeing, he's foreseeing the future, that he's going to rent those properties. And, the best thing about it is, those properties are going to be almost brand new, and people wants to live in a nice house and they are willing to pay, a little bit more. So I think, the rentals are still going to be, a good investment. The other stuff that they're talking is no big developments. I mean, if you're doing, a tear down, or if you're, doing a new construction, it's, it's going to take you a while. But like I say, right now everything is selling, even new construction, everything is selling because there is no inventory in the market. And, unfortunately or fortunately, people needs a place to live. And that's what is driving all this market. And that's what we've seen, the short-term easy fix and flips, the wholesales, if you are, talking to people in pre-foreclosure, there's going to be a lot of pre-foreclosure deals, in the next 6 months or so. Vacant properties, landlords that they have properties and now they want to just retire, So those are the deals that I've seen it the most. And I think it's going to, they're going to come into the market, and, you can still make money as an investor.
Okay. So what about tired landlords? Tell me more about that. What does that mean? More are these people that just simply don't want to deal with people not paying rents?
Yeah. There is some of those landlords that they've been renting for a long time, and sometimes they have properties that they have not been properly done, or they're old. So they're tired of just, let's say, being fixing properties every month, and now with people not paying, they just want to get rid of those properties. I've seen big portfolios, 10, 20 properties that they're selling, because they say, what, I'm just going to take my money and I'm going to retire. So, but, the other thing is, even at that point, you're probably getting properties at 60, 70% on the dollar, so like 70 cents on the dollar, which, you still have 30% in the deal that, if you fix it, you're still going to have a pretty good, return on your investment. So that's a good question. And that, that's pretty much, I've seen a lot of people doing that now. They're selling the properties that they had rented, and there's other investors buying.
What about the market? How do you think it's doing? How do you think it's going to stand this?
See, according to some numbers, from like, bigger packers
Mhm.
and all those guys, connected investors, the market is, the listings are up, by like 10, 12%. The sales, from compared to the last year, they've been up more than 3%.
Mhm.
The mortgage loans, 18 to 20%, the mortgage loan applications. So, and what's driving this is because the interest rates are down. So 3%, 3.5%. I mean, we haven't seen it in like 8, 10 years.
Right.
So and what this does is that if you're getting a 3%, then your affordability is up because you can buy more property with a 3% loan, instead of paying a 6% loan.
Mm.
So those are some of the stuff that is going on the, let's say, on the market, on the sales, on the rates, on how people is buying properties and the affordability. So that's what we've seen, and that's what some of the big investors, like I say, like those guys from bigger pockets, those guys from connected investors, those are the ones that say, this is what's going on.
Okay. What about the big what about the ones that you should stay away from? Because I know, like, I received a big question, like, all right, tell me what not to get, or what shouldn't I go for?
Yeah, so and like I say, I talk to a lot of lenders, and what's their appetite is for, what kind of loans are they looking
Hmm.
for, and also, with other investors, and I seen, that a lot of them, they don't want to do big factories, why? Because a lot of the business are closed, huh?
Right.
No warehouses, retail. I mean, if you see, I think in most part of the USA, um, there is not much, there's not even 50% of the retail open, So those are, the deals that an investor or a lender doesn't want to do, the office spaces, the hotels,
Now,
self-storage.
now I do have a
Um,
question, and I'm sorry to interrupt, because I want you to touch upon something that's very interesting. I actually had a client today that had asked me about uh, multi-family units, and how those can be considered a little bit risky. Is that something that you would also consider as a big no?
Um, See, this is the thing with the COVID, and people being in small spaces.
Yeah.
They
Mm,
don't want to be in that situation
right.
anymore. So a
Right.
lot of the new buyers or
Mhm.
the people who can rent a house, they rather rent a house because I mean, with the new millennials and stuff, they want to have a yard for the dog. They want to go outside
Right.
instead of being in a high rise with another 500 people. So I think the multifamily is still a good business, but up to probably they said 15, no more than 20 properties. I mean, there is going to be people who's going to still rent those, but
Right.
I think a big percentage, they want to be able to go outside.
Right.
So it is the same thing that I was saying, with some investors, including myself. I don't want to be here in Chicago with this cold weather inside. I'd rather be somewhere,
Especially when
nice
some,
and happy.
right, it's being able to adapt to the market, because especially right now, I mean, look at how many retail businesses have changed their model just because. And even restaurants, how many times have so many of these restaurants eliminated many of these spaces, which ultimately put a toll on their revenues, which means that if they're not making enough money, they're going to go out of business. That, I think, that goes along with retail. And some, I've here in Chicago, there are certain retail stores that only 4 people are allowed to go in at the same time. And there's only so much that you can sell to 4 people at a time. But it's one of those things where we have to adapt to the marketplace. And right now, because of COVID, who knows how long it's going to be. Really, it could be for the next year or so before things get back to normal. But before then, do you think that right now these big no's would be more of an opportunity because maybe not many people are going to be investing in these, but then once the market goes back, then it could be possibly an opportunity?
It could be an opportunity, but for the big investor, the people who has, millions of dollars, to invest, probably, they can do other stuff. I mean, I know some other investors, they have millions, they convert, retail into different stuff, self-storage, something else, So, I mean, every time that is, there is a distress, or there is, all these, down market, there
Mhm.
is opportunity, for other people to make money, but, you got to be prepared. So
Right.
that's why, we are kind of preparing people, to qualify for these loans while they last, because we don't know if we're going to be able to get the same loans, in 3 or 6 months.
Mhm.
So remember, just 3 months, 3 months ago, it was nothing. All the investors were down. Maybe a couple investors were doing, 20% down payment, or
Right.
25% down payment, or 30% down payment. And the investor who wanted to do the deal, they took it. But
Right.
now we're coming back to like 20% down payment, 15% down payment. But it depends on experience, and you have to be prepared. You need
Right.
to know what you're doing in order for you to, take advantage of. Everybody is, not trying to buy properties to fix and flip or to rent, but there is a lot of investors who say, what, that now's the time, because you're not going to have a lot of competition, a lot of people competing with you.
Right.
So that's what we want to talk, next, and
Yeah, well, you mentioned being prepared. And I know for some of the programs that I have, I know there are certain qualifications that we need to do, but what are some of the ideal things that people really need to start doing in order to prepare themselves? Like if you can give us a list of all the things that you would require to make sure that we are prepared.
Yeah, I know we have a list in the, on the Zoom meeting, and we have a list on the Facebook. But this is some of the stuff that you can do, and I'm gonna go, in a little more detail, so they can people understand why, and then they can get prepared. So the best thing, or let's say the first thing to get, prepared, if you really want to get into, a real estate investment, um, business, is to, set up your corporation or set up your LLC. And why is that? I said, well, why can I do it in my personal name? Well, the reason is because, a lot of these investors, or a lot of these lenders, they don't want to, they're not going to give you a loan in your personal name. These are business loans. Okay. And, before COVID, it was some lenders that were doing some personal, deals in your personal name. But after COVID, almost everybody went to, have an LLC, have a corporation, because now, it's in the business, it's not your personal name, and it's because it's a business loan. The other thing is, if they put it in your personal name, they think that it's easy for you to say, oh, you know what, I'm going to live in the property and just, stay with the loan.
Mhm.
And they don't have that kind of license,
Right.
they have a license to sell commercial loans. So that's why, number one, let's say, is get your business set up and get ready,
Mhm.
because when the first deal comes to your door, you have to be prepared.
Right.
Okay, so that's number one. Number two, it's have some money for down payment. Why? Because everybody, most of the lenders is asking, from 10 to 20%. Most of them, if you're new, they're gonna ask for 20% down payment plus closing costs. So, the best thing about this is that, a lot of these lenders, they don't require you to have this money season, So if somebody give it to you, if you got it from a loan, if your, friends give it to you and you put it in your account, it's fine. We just need to be ready
Mhm.
and have the money and the account by the day of closing.
Mhm.
So, and also the down payment, and I think you're going to talk about the down payment a little bit more
Yeah.
um, in detail, because with the down payment you can always get a business loan, you can always get a line of credit. So basically, I think you're going to talk about how can people get 100% financing, you know,
Absolutely.
right?
Absolutely. And this is one, I want you guys to grasp what Antonio just said. And he mentioned that with the loans that he'll be talking about, he's going to be talking about hard money loans, sometimes private money loans, and real estate loans, right? They're requiring a business LLC, because keep in mind, when it comes to real estate, it has to be secured somehow. But our job is to figure out, how do we work with all the tools that we have. And this is why we have a perfect partnership with Antonio, because he'll go ahead and provide you with the hard money loan. He'll go ahead and provide you with that real estate financing that you're looking for. But then when it comes to down payment, this is where I come in. Now, the money that we provide on our end through e-funding experts is through term loans and credit lines. And some of you guys might be familiar with credit lines, some of you guys might be familiar with term loans, but for those of you guys that are not, the way that we push this through is that we provide access to capital through by leveraging your personal credit. Because just like Antonio said, some of these lenders will require for you to have a business LLC, right? Or a corporation. And if you don't have that, they won't give you the money. But for us, it is not necessary for you to have that. See, the funding that we provide could be personal and business. If you have business credit, of course, you'll need an LLC and an articles of incorporation. But if you have a good credit score of a 680 and above, if you have less than 30% debt to credit ratio, maybe less than 40% debt to income ratio, no more than 5 inquiries within a year. And all of these are just stipulations that can be, they're not necessarily set in stone, but that's kind of like the rule of thumb. As long as you have some of that criteria and you have some sort of income coming in, whether it be through a job or whether it be through a business, as long as you can prove income, I can get you up to $350,000 in cash as a term loan. Now, keep in mind that this is not, quote unquote, a business loan or a business line of credit, unless we are going after business credit lines, of course. But this is where we get you the funds directly deposited into your bank account, and they show up as cash. Now, like Antonio said, some of these lenders are not going to require for you to have seasoned accounts or seasoned cash. So that's how you get to 100% financing, because Antonio, let's say he'll provide the 90%. Let's say that you need 10%, right? Which, let's say it's $100,000, just an example. Well, $100,000 for us, we can get you $100,000 in cash. If we give you $100,000 in cash and you get the rest from Antonio, now you have 100% financing. Now because our loans are separate from real estate, on our end, just like Antonio said, the reason why some of these lenders are requiring you to actually have to go ahead and have an LLC or a corporation is because they don't want to take the risk of you just simply, walking away and not having any collateral. Well, the funding that we offer doesn't need any collateral. It's uncollateralized funding. So it's not going to be tied into the loan that you'll get from Antonio, and it won't be tied into any type of real estate that you currently have. So even if you're a brand new real estate investor with no experience and this is your first deal, as long as you meet the criteria of a 680 FICO score, and you don't have any debt, or you don't have any late payments or collections or anything like that that might affect your credit, we can help you, because at that point you'll go with Antonio. He'll get you the loan, the main loan, and then we'll get the money for the down payment. And all of a sudden now you're 100% financing. Now that's one of the biggest things that we can do right now even with COVID happening. Keep in mind that right now, Antonio mentioned about getting ready for funding. Well, a lot of real estate investors are getting ready that way, getting access to down payment money, getting access to hard money loans, or even just pre-approval loans. If you guys want any more information on that, just feel free to reach out to myself or simply just go to my website at efundingexperts.com, and Antonio will share his website as to how you can actually log in and apply for a hard money loan and some of the other loans that we'll be talking about, because I want to ask you, Antonio, about how to do fix and flip loans, and we're going to be talking about rental programs and how that works. So Antonio will be sharing in his information as to how to get started there. But for those of you guys that want to know exactly how much money you can qualify for down payment, I encourage you to go to the website, which is efundingexperts.com. And that's efundingexperts with an s.com, and just go ahead and set up an application. Go ahead and fill out an application just so we can contact you, and we'll go over the details one-on-one, because a lot of this is not a one size fits all. It's a very customized program that if you guys don't know too much about Antonio brings years and years of experience in real estate. He's funded millions of dollars in real estate loans. And so whenever we work with someone, we don't work with them just to get them the money and then that's it. We work with them so that they can have a strategy along with that money. Because so many times I'm sure you remember, Antonio, how many people we've helped that, they come to us, they're like, all right, I have $100,000. All right, what should I do with it? And right away, there's no plan, but we have partnerships, we have deals, and that's something that we can work with Antonio. So Antonio, having said that about the down payment, why don't you tell us a little bit more like on either putting together the offers, building a portfolio.
Yeah.
Yeah.
So, so I mean, we got stuck on number two, but that's kind
Oh,
of the,
sorry.
one of the best things, because we're gonna need money for down payment. I don't know. You hear people say, "Oh, yeah, you can get into real estate with no money down." Yeah, you can do it, but it's gonna be hard. So that's why money for down payment or raising money is very important. So number one, get your business set up. Number two, get your money for down payment or get a partner, who has the money. The other thing about an LLC or to have a business set up is that you can have the experience and somebody else can have, the money. So, and you guys can partner up in one LLC, doing deals. So, you don't have to have all the stuff together. Somebody else, have it, the money, you can do it. The number three is going to be, working on your credit. The credit is very important. And a lot of the lenders, they require you to have a minimum down pay, a minimum credit score. I've been talking with some lenders now, they used to be 680, when we were like in COVID, 680, 700. Now we're like 640, even 620, we can do loans, fix and flip. Of course, it's going to be 20 or 25% down payment. It depends on the credit, but if you work on your credit and you have, the best credit, you can get lines of credit with Jose. We can approve you for better loans, better terms. And if you don't have the credit, get a partner who has the credit, and let's say an example, even if you're going to refinance, and we're going to talk about this, in more detail. If you have an LLC or if you have a property that is free and clear, and you have, I don't know, 200,000. Even if you don't have the credit, you can move the property to an LLC yourself, with a minimum percentage, and somebody with a better credit, and we can do that loan. Now you can have access to all the money that is stuck in those properties and that they were paid off. So credit is very important. So work on it or find a partner who has the credit or has the money. Okay. Then number four is to get approved. Approval is such a big thing. If you do the residential side, if you don't have an approval, no realtor is going to show you a house, because you're not approved. Why should be checking houses? You're not even approved. So we can get you approved, you know, and Jose was talking, you know, you can call me directly. You can go to my website, the investorfunding.com,
Mhm.
THE, investorfunding.com. And, you know, you can fill out an application or you can call me directly. My number is 630-640-9060. And we can get you approved. So if you're not approved, why are you checking properties? You know, if you don't have the money, unless you have the cash. But if you want to do, you know, hard money loan, get approved first. You know, and by getting approved is I just need an application. I just need to know if you have the credit. I just need to know if you have the money for down payment and closing costs. And with that, I can give you approval funds and I can give you an approval letter. What this means is that now you're ready, you're actually ready to put offers, you know, and start checking properties. So if you don't get approved, nothing is going to happen because you're not ready. But if you already approved, you have the money for down payment, you have the credit, you're now going to start finding properties.
Mhm.
So that way, you know, you can start putting properties with your proper, you know, LLC, with your approval letter, with your proof of funds, and now you can see that, you know, the ball is rolling. Now you're actually doing what you were supposed to do, you know, start putting offers. So if you put, let's say, 3, 5 offers, at least one is gonna come through, and then you're gonna have a property, either, you know, for fix and flip or rental. But the best, you know, like I say, you know, these are simple steps. If you follow these steps, I'm pretty sure in 30, 90 days, you're gonna be ready, you know, for funding, and you're gonna be ready to do your first fix and flip or your first, you know, fix and rent. So, you know, what I'm telling you, and this is the way I started. You know, I'm an investor too. You know, with Jose, we've done some deals, but I done, you know, fix and flips. I have some rentals, but this is the way you actually start it. You know, if you don't get prepared, you know, it's just a wish. You know, you wish to be an investor, but you don't have the LLC. You're not working on the money. Your credit is shot. You're not doing anything. If you really want to get into real estate investing, then you need to start preparing, you know. And if you don't have the credit, don't worry. Somebody else will have it, you know. Just find a partner. If you don't have the money, somebody else will have the money. And I'm telling you this because this is what happened to me. You know, most of the deals that I done, they're with partners. You know, not because I don't have the money. It's because, you know, you can still share. Not only you share the money, but you share, you know, you don't have all the responsibility. You know, if you
Right.
want to start that way.
and
So
and we all got to start somewhere, right? Because
yeah,
I know that I get a lot of a lot of questions, and sometimes they're like, well, how do I get started? And we go over this, you know, these list or the list that we just shared, and everyone or the people that I talk to in this particular example, they'll say, well, there has to be a fastest way. And see, there's no faster quote unquote way other than, you know, just doing it the right way. Because even if you don't have credit, like say that you don't have the credit that you're needing and you want to push it through, you're not going to get the best offers. You're not going to get the best offers. You're not going to get the best credit offers as well. You may get approved, but you're not, it doesn't mean that you're going to get that ideal interest rate or that ideal offer that you want in order for it to make it work. Now, keep in mind, every time that you try, there is an inquiry that's being done. And so you want to keep that in consideration, and definitely follow all the tools that, or definitely use all the tools that you get, along with myself and Antonio, and do it the right way. You know, it may not be the fastest way, but it's the right way. You want to fix your credit, you want to get the down payment, and you want to get approved, start putting offers, building your portfolio. And it may take you a couple of months, it may take you a year, but that's why it's important for you to actually go through the process right now and actually get it to where you can go ahead and set yourself up for success. Because 3 years from now, you don't want to you don't want to look back at this particular Zoom meeting and say, man, 2020 was a really good opportunity and I should have jumped on it. And guess what? one of the things that Maria shared is that whenever there is she mentioned a really nice quote. I'm trying to find it. Something about crisis being part of an opportunity. And it's so true because there's a lot of things that's happening that's not ideal for many families, many Americans, many people in the world. But there's always an opportunity somehow. And this is why you guys want to get it done now. If you have issues with your credit, get it fixed now, because some of these credit situations that you guys may have may only take 3 months per se. And it may seem like a lot for you guys, but guess what? In 3 months, we're going to start to see all of these opportunities jump up within the real estate market. And by then you'll be ready to take action and get access to this funding where you guys can start building your portfolio.
Like Jose said, I started that way, but I was always, thinking and do something, but, and I started and I said, okay, I want to do my LLC. I'm going to do my LLC. And it took me a couple months, to do it. I had an opportunity to jump into a good deal, and I didn't get it because I wasn't ready. I didn't have my LLC ready. I didn't have my partners or my money ready. So it's, it seems like it's a lot of work, but at the beginning, open your LLC. It's simple as that, and start, talking to other people. And like I say, when there is crisis, there always opportunity. And as Jose knows, some of my friends, that we know that in 2008, was bad, but there were a lot of people making money, or they bought properties. I know at least 5 investors who, they bought properties for 30,000 that now they worth, 150, 200,000. But they jump on it, and that's why we're telling you, just get ready, because we see that there is going to be another, a round of opportunity where you can make some money, or you can start, doing something, but you need to take action, otherwise it's just, I have a friend say, it's just a dream, he say, there is these guys, they're always dreaming, and they don't do anything. So, you need to separate yourself from dreamers to doers, and I mean, it can happen, but it's going to take a lot of work too, I mean, being an investor is not easy, as everybody says, or as you see it on TV, but it's a rewarding, experience when you do it. You learn. It's a learning process, but it can be done, and that's why we're here. I mean, Jose and I, we're ready to help you. I know, a lot of people, and including myself, we're going through difficult times, Jose knows a little bit more, but, we're going through stuff, and everybody, just not, the world is it goes through a difficult time, and, you need to get prepared for something, yeah, there is this pandemic going on, but you need to see the future,
Yep.
in order to do something. So
Why don't you
that's
tell
what I
us
can say.
about, yeah, and tell us more about the fix and flip loans, because there's 2 loans in particular that I've been getting a lot of questions prior to doing this event. I actually did a questionnaire with a couple of attendees that had registered, and they asked me 2 questions.
Sure.
How do fix and flip loans work, and also how does the rental program work? Can you touch upon those 2?
Okay, so so we're I mean, let's say we call it fix and flip loan, but in reality is a loan to acquire any property. Whether you're gonna do a fix and flip or you're gonna do a rental, it's a 2-process loan, let's say. Okay, so if you're gonna do a fix and flip, you purchase the property, and usually a lot of the lenders, they're gonna require 20% down payment of the purchase price. Okay, and we need to add the closing costs. It could be another 5%.
Mm-hmm.
So 20% down payment, and if you need money for the rehab, it's 100% of the rehab. Okay, so basically you're getting almost 100%, let's say, because you're getting 80%, of the purchase price. You need to bring your 20% down, but they'll give you money for the rehab too. And that's because, they want to see how much this property is going to be worth in the future. And in that case, and I don't want to touch a lot and go into a lot of details, but if you apply, the 70% rule, which says, that 70% of the after repair value, that's the maximum loan that the lender is going to give you. An example, if you buy in a property for 100,000 and you put in 30,000 in rehab, that property should be at, let's say, 200,000. So if you do 70% of 200,000, that's 140,000. So if you are buying this property for 100,000 and 30,000 in rehab, you're good. You're below the 70% rule. But let's say you bought the property for 120 and you're putting 40 on it. So now you're above, the 140. So now that means that you're going to leave money on the table if you refinance, or you're going to lose money if you do a fix and flip. So that's why it's very, it's a good, rule that a lot of the investors use, to see if a property makes sense or not. Mm-hmm. So that's the fix and flip, let's say, down payment, 100% rehab. And these loans usually are in an entity. So it's got to be an LLC, a corporation, to do these kind of loans, okay? Credit, like I say, usually the best rates are going to be in the 660 credit and above. Mm-hmm. Yesterday, I was talking to some of my lenders and they can do 620. Of course, the rate is going to be a little bit high. And even they can do 600 score, but, and now we're in the 15%, and that's not the loans we want to do, because it's a very risky loan for everybody. So right. That's what, we're trying to tell people, just get your credit up or get somebody with a better credit so we can get you a better rate, and better terms. Okay. Loan amount, everybody wants to go above the 100,000 after repair value, at least. So I have some lenders that they can do, 50,000, 75,000, but most of them, they're going to do the 100,000 and up. Okay. Like we mentioned before, there's no seasoning. So if you got the money in another account, you can put it in your account. Mm-hmm. I got some lenders that now they're opening up to, if you have money in a 401k, they can use it as a leverage, to show that you have, other liquidity. So it looks good, let's say.
Right.
Okay. The best thing about these loans is that there is no income taxes requirement, no W-2, no job.
It's very useful right now.
So you just need to have your 20% plus closing costs, your credit score, and you can start doing, the first part, let's say, for a fix and flip, or you can still use it to buy, fix it, and then rent it. So this is the first, let's say, part to do, whether it's a fix and flip or rental, but you need to go to an acquisition loan, let's say. So the fix and flip loan is for, to buy the property. And if you're going to rent it or fix it, that's another thing, So that's, let's say that's, one of the best loans I've seen it, because they don't require a lot of stuff. They just want to know that the deal is going to make sense, And that's why, they're going to require you to do your scope of work to see how, what's the after repair value is going to be, or if there is comparables, and all the stuff you're going to check with your realtor, Right. So, it just, if we can start talking, on fix and flip, we can take hours and hours, because there is a lot of information to talk about. But if anybody has some question, they can always call me. They can always go to my website. This is what I do every day. And also, I do my fix and flips, my rentals. But, this is something that I think, I can help a lot of people, because I know the process, and I've done a lot of deals, and let's say, I know how you can qualify. And not just to tell you, I have people who come to me, I pre-qualify, and they say, you know what, I going directly with another lender. Guess what? 2-3 weeks later, they're coming back, say, hey, Antonio, I don't know why they didn't approve me. Yeah, because you don't know what they're asking for.
Right.
Because, what we do is, we prepare you so you can close the loan.
And that's when the fee doubles, right, on your end.
Sometimes, yeah, you have to.
Yeah, no, but that's awesome. Thank you so much. And there's no prepayment penalty for those
Yeah, no
for those.
prepayment penalty.
Okay.
Yeah,
Now,
and we're gonna go. If anybody has some question later on, we can go through questions. And but
yeah.
that's what fix and flip is. And like I say, it's not a fix and flip loan; it's an acquisition loan. So it's a loan to purchase properties.
Okay.
And and also you can use this one, or if, let's say, if you want to buy a property and you're going to rent it, and you say, you know what, I just want to put it into a 30-year fixed loan, we can do that also directly. But you're going to leave your 20 or 30% down in the deal.
Right,
So,
right. Got it. What about the rental program?
well, the rental program, it's let's say, is the second step after the purchase, let's say, of the acquisition loan or the fix and flip loan. So you first buy the property, the lender gives you money for the rehab. And if you want to rent the property, then you rent it. After the property is rented, now you can refinance the property into a longer term, because the fix and flip loan is only for 9 to 12 months. So it's a short-term loan just to buy the property, fix it, and sell it or refinance it. So the second step is the rental program, which, if you already fixed the property, rented, you can refinance it. Some of the lenders, they require 3 months, 6 months seasoning. So from the day you purchase, let's say you purchase the property today, so you need, 3 months in order for you to refinance it. But, if you're going to fix it and then rent it, usually it's about 3 months, but now I've seen people with no seasoning. You buy the property, you fix it, you rent it in a month, we can refinance it. So, I mean, the market is getting more, the lenders are getting more,
assertive or more open.
Yeah. So the refinance, let's say, you're going to refinance an existing hard money loan. So you buy, fix, rent, and refinance into a 30-year fixed loan. So now, you have a lower payment with taxes and insurance, and you're still making cash flow, So also you can refinance properties that are free and clear. A lot of the investors, they say, oh, I have 2 properties free and clear, but I don't have any money. Well, yeah, because all your money is in your properties. If you need money right away, there's no easy way to refinance them. And the other thing is that if you go to your regular bank, they're gonna say no, because you need to qualify. You need a W-2, you need a job. With us, if you have a free and clear property that is rented, we can do it up to 70% of the after repair value. So whatever the value is, let's say if the property is worth 200,000, we'll give you 140,000 back, And we don't need a job, we don't need a W-2, we only need a 680 credit score. Right. And you can get money back, you can use the money to buy more properties, and now you can build your own portfolio. And that's what, that's what people buy, these cheap properties, 60,000, they put 40 on it, it's gonna be worth 160, 180. And they refinance it, and now they get their down payment back. So they have 0 down in the loan. So that's why, they're getting cash flow, because, they're using the same money and go and buy another property and another property. And when you see they already have 5, 10 properties, they have a portfolio, because they're kind of using, it's kind of recycle money. Let's say it's almost the same money used over and over and over. And that's when it comes, when you talk about the guy, if you have 100,000, we can show you how to get 3, 4 properties, with the 100,000, just putting 20% down. And now you can start building a portfolio,
Right. That's incredible. That's great. What about, look, I have a question that actually it kind of like cross references my notes. And there's a part here that says non-owner occupied, but I also want to talk about a question that I received from one of our attendees about lines of credit or credit lines or even home equity lines, but based on the on a property that is currently the primary home. I know from my end, in terms of a real estate loan, we can't do a line of credit on existing residential primary homes. We can do a line of credit in general under your name, but not under a residential home from my resources. But what about you, Antonio? How do you have any particular resources that can do that?
Well, we have other partners, but these loans, they has to be done, from a residential lender because they live in the property. So those are different rules. What we do is commercial loan, investor loans, loans, or, business loan.
Hmm.
That's why they need an LLC, because it's a
Right.
business loan. And, we don't do anything that is,
Yeah.
the person is going to live in the property because that's a different license, let's say,
Yeah.
for the lenders. So if they need a line of credit, I mean, we have some partners, we have some people that we work with that they have, the residential license,
Hmm.
and some lenders, some banks, they do the lines of credit and, personal residence. If they have questions, they can call us later, they can email us, and we can give them, some of these people, but we don't do it. It's mostly for non-owner occupied properties.
Got it. All right. You mentioned on these ones, they also don't require any income verification or income taxes, and there's no W-2s.
Yeah, exactly. This loan, and that's very cool, because as an investor, most of the investors, we're 1099, we're just working our way up. We don't have a W-2. So, what the lender's looking here is, that you have at least 680 score to give you up to 70%
Hmm.
of after repair value. Um, and there is no W-2, no 1099, no income taxes because this is an asset-based loan. So
Right.
it's based on the property, it's based on how much money are you making, renting this property. So that's why, like I say, it's very cool because you
Yeah.
can have as many loans as you want. And the other thing is, being in your LLC, usually they don't show up in your credit, in your personal
Right.
credit.
Okay.
So yeah.
That's awesome. Well, thank you so much. You guys, we're gonna go ahead and transition into Q&A. So, it is about an hour, so we want to go ahead and dedicate a couple of minutes to answering any of your questions. I know there is one particular question to you, addressed to you, Antonio, and it is whether you are a lender or are you between the investor and the lender?
Well, I'm a broker, so I have I have private lenders, I have some hedge funds, I have hard money lenders, so um, I'm let's say I'm the the middleman in this, in a lot of these transactions. But like I say, if you go directly to the lender and if you don't know the guidelines, you can lose a deal, because you don't know what you're getting into it. So as an investor, I can guide people and tell, what, this is how it's done. This is what you're gonna do. This is how we're gonna structure the deal. So it's
Right.
more, so let's say I'm more like a deal structuring, person, because I can say, hey, there's people who say, hey, I'm under contract and I put my personal name. Too bad, I can't do
Right. It
it.
actually, yeah. And it actually reminds me, since everyone here is in real estate, is whether you could technically hire a plumber if something happens to your bathroom, or you could do it yourself. But what's more beneficial? Just going straight to a plumber and, getting the best deal, not getting messy, and just getting it done. And for somebody like Antonio, even for myself, I'm also a broker, but I also do private loans myself. And through my corporation, we do private loans, but we are very, very particular about what kind of deals do we fund, because there is a lot of risk involved. There's a lot of risk involved for both myself, my investors, and then even the company. Especially right now, with that COVID's happening, for me as a private investor, I would much rather push a deal over to a lender rather than me fund it myself, because it's just a matter of how much risk we want to take. And see, somebody like Antonio, somebody like myself is I can give you the blueprints as to how to get that ideal loan, those ideal terms, versus you going directly to a lender, and perhaps maybe the lender could, quote unquote, take advantage of the opportunity that you're not very well familiar with the loan deal, or perhaps maybe the property. And there have been occasions from my perspective where somebody goes straight to the lender, and then the lender circumvents the client or the prospect, or the potential buyer, and they take the deal themselves. And see, that's the part where, if on my end, we only work with quality people, quality lenders that have integrity, and that you can rest assured that we can bet our reputation on those people. And that's the part where, when it comes to lending, man, it's just like in the city. There's some parts that are not really meant to be going there on your own when it's late at dark. And this is exactly what it is. In the lending industry, if you don't know the right people, or if you don't know exactly what you're getting yourself into, you can get into trouble. And it could be a difference between getting your deal to work out, or losing thousands and thousands of dollars. Because, Antonio, how many times have you seen where somebody doesn't structure their deal correctly, and they don't realize what's going on? So they end up getting a loan, they end up getting everything, and then before you know it, you're looking at the numbers and you're like, you're not making any money. You're stressing yourself over everything, and you're not even making any money on it.
Yeah, no, and I see it, actually, I have clients that they say, we send the deal, he said, well, it's going to be three bedroom. I got the comparables. I say, yeah, but your comparables are for four bedroom, at let's say 300,000. Yours is a three bedroom, and they're only going for 250. And you
Right.
think you're going to make, 100,000? You're probably going to make 20, 30,000.
Yeah.
Or, the deal doesn't make any sense. Oh, but I want to do it. Well, the lender doesn't want to do it because it
Right.
doesn't make sense for them. It doesn't make, they're
Yeah.
not making any money. And you're right, sometimes, you can go directly to a lender and get denied, or you can come through us and, we structure the deal the way that it's going to go through,
Hmm.
and and one of the things right now is that we can structure the deal. We can take people out. We can put people in the LLCs, and the lender is okay with it. You just need to send it, the right way. But, it's not like residential. This is commercial loans, but you
Hmm.
need to know the right people. You need to
Right.
know the right, who is doing what. And the other thing is, we do this every day. I know the guidelines for most of the lenders. So if you tell me, I have a 600 score, I know where your loan is going to be, and
Right.
I know what kind of rate you're going to have.
Right.
But if you say, well, I have only 20%, but I need to bring somebody else. Yeah, then we need to do this in order to, get it done. So,
Right.
I mean, you're right.
And
It's a matter of who can do the loan, not
right.
who. I mean, who
Abs.
can close it.
Yeah. And one other question. Well, actually, we have two more questions. They're both important. I'll go ahead and answer this one first because it has two parts, and then I'll have Antonio answer this as well. One of the questions was, what are the costs of using your services, assuming 1 to 3 parts of the list are completed? And then the other question was, to elaborate personal credit lines, what are the requirements? So to address the personal credit lines first, because then we'll lead into the cost, is that when it comes to personal credit lines, think about it like this. And this is just for my services, right? This is for the gap funding, the down payment. The funding that we're offering has no limits to what you can use the money for. So you could use it for real estate. You can go ahead and purchase a restaurant. I actually just helped my mom raise money for her restaurant, which is opened, Libertyville, if anybody's available. But we could use it for any purpose, right? So the funding that we offer when it comes to credit lines is we can do it one or two ways. We could do it as a form of a credit card, okay? And then this is something that many of you guys may or may not be familiarized with. But when we leverage your personal credit and we're giving you a line of credit based on that personal credit, it could be a personal credit card. Now, many of it's one of those strategies where it may or may not work with what you're doing. So that's why it's important for us to really go over the numbers, because personal credit cards, if you go over a certain percentage, typically it's about 20 to 30% utilization, then your score takes a toll, which overall it takes a toll on everything, including the hard money loans. Because you mentioned, you just heard what Antonio said. And Antonio said that, there's some lenders that will give you based on 620, 640s. But remember, the lower the score, the higher the interest rates you'll get. So we want to make sure we protect your credit. So the first thing is we prefer to go after business credit lines first, because a business credit line, even though we leverage your personal credit, we will go ahead and raise that credit cards, right? Business credit cards under your business. And then if your business is generating revenue, we can provide true lines of credit that are in the form of a business, that are in the form of almost a checking account, pretty much. It's like an equity line of credit, but it's based on your revenues, because not everybody has those revenues. What happens is that we end up giving them business credit cards. And if they want the maximum amount, let's say that you've already gone through Antonio's program, and even if you haven't, if you just need that rehab money, or perhaps just a little bit extra money just so you can kind of get your deal done, in this case, then we could go for personal credit cards and a business line of credit. And again, if your business has revenues, then we can do both of them. We can do actually three of them. We can do the personal credit cards, the business credit cards, and we can perhaps do a business line of credit. So that's pretty much what it entails, you guys. Business line of credit is something that we leverage your personal credit. No matter what, you're still going to have to have good credit, minimum 680 for those type of programs and services. And in regards to our fee when it comes to term loans and credit lines, for me, it is 15% of the amount that gets funded. But remember this, it may seem like a lot, and it is a lot if your deal is not structured the right way, but there's a lot of benefits to what we're doing. All right. The funding amount that we're giving you is based on the overall credit or income that you have, and it's non-collateralized. There are situations where we provide, like say 150, we can go up to 350,000. We'll go ahead and provide the funding. We'll go ahead and give them access to, like say 150,000. Sometimes some of the properties that the clients are going for, they're way below that. So they'll just purchase the property upfront in cash. Does that make sense? So then they'll go ahead and do a rehab and they'll do a home equity line of credit, pay off the debt, and then just go from there. But if somebody wants, let's say, they're looking for, let's just give you an example, $50,000, right? If they're doing the 50,000 and they're paying 7,500, then keep in mind that the money that we charge is based on, can also be paid with the same amount of money that we raised. And so it's not a one size fits all. Our job is not to make it work, rather helping you figuring out whether it works or not, because trying to make it work is like trying to put a square peg in a round hole. It's just not going to work. So we have to make sure that your deal has enough leverage so that we can go ahead and make those numbers work. And so when it comes to Antonio, he mentioned 100% finance, and it's correct. You got 90% from Antonio, and then you may only need $20,000 for the gap money. Is not going to cost you anything out of pocket per se, even though you do have to pay for it, of course. But you can, if I give you $30,000 in cash and you end up using it for this down payment, and that's where the deal might make sense, because as long as your numbers are correct, you're going to make a killing on that particular deal. But it's about structuring the deal. What about you, Antonio? There's a couple other questions that came in, but I want you to kind of go over your fees and how it works.
Yeah, so usually, a lot of these lenders, it's not like the residential side where usually the lender pays you, or the loan officer. So in this case, most of the stuff is paid by the buyer, or or the client, because the lenders don't pay anybody. They don't pay their loan officers, they don't pay me. So somebody has to pay. So usually it's about between 2 and 4 points, and a point is 1% of the loan. So if it's 100,000, so it's $1,000. So sometimes they charge 3 points, they pay me half, one and a half. It depends. But the maximum I think I go is about 4%. I've seen, other lenders which go, 7%, 8% and along, and it doesn't make any sense. We're just trying to help as much as we can. Of course, this is a job, and we all want to make money. So
And
we
those
can help you
fees,
make money.
and those
So,
fees are incorporated in the loan, correct, Antonio?
yeah, well, those are costs are, the 20% plus closing costs.
Mm-hmm.
So that's why, closing costs also is, you need to have at least 25%,
Right.
because closing cost is going to be 3%. So let's say 3% of 100. So it's another $3,000 plus, third party fees, title, insurance. So, it up. So that's why they have to have 20% plus closing costs, which means it's about 25% of the
Got it.
purchase price.
Okay, perfect. Now the other question is, I believe it may be for you though. And it says, my business partner and I are under one LLC. How can we put both of our information on the loan application?
Well, if, and this is, something new. Before, if there is two person in the LLC, one can be the guarantor. And we only needed one information, and the other one, they didn't touch it. But now they asking, for both information. So it's a column where it says, borrower and co-borrower. So whoever is going to be the first one is going to be the borrower, and the other one the co-borrower. The new thing with the hard money lenders is that, they're going to run both credits. Before they used to run only one credit, whoever has, a majority percentage on the LLC. Let's say, I'm 80% and you're 20, so they're going to run my credit. But
Right.
now they're going to run both credits. And the problem now is that, if I have a 700 score, or if I have 500 score and you have 700 score, they're going to combine it. And if they combine it, now we're at 600 or 650. So you don't qualify. So that's why, it's very important. If let's say if my partner has a 500, let's take it out of the LLC, because it's going to hurt the deal, So, and we can do that, before we send the loan. So that's why, it's important. I mean, if they both have, 680 and above, it's great, we can put them both. But if not, then probably one of them need to come out of the LLC, because it's going to hurt the qualifying process.
Mm-hmm. Now, do we have anybody? There's two more questions, I guess. I think this is a question. Did you have anyone that is in the process, or that perhaps is purchasing hotels that you know of? Because it seems like there's a couple of attendees that are asking about referrals. Do we have anybody that is purchasing hotels right now?
Yeah, so that's another thing, and I mean, you said it before, I'm not only do loans, I'm an investor, so I buy properties. If anybody has properties, we can buy them. If not, I have other investors. I have 300, 500 investors that they're looking for deals. If you have deals, we also can do wholesales. If you have deals for hotels, let us know, send us an email. We have 2,000, you have, a lot of investors that we can send them, and, we can help you, sell those deals. As, like I say, I'm doing some wholesales right now, and, a lot of my investors, I can get them the loan, and they can buy that property. So if you have deals, just send us an email, and we'll help you, we'll help you to sell them. We'll help you to see who's buying what.
Right.
And like I say, not only that, now we're doing, I'm doing a lot of commercial properties, mixed use. We're doing multi-units, 5 to 20 units. We're doing not only hotels, we're doing strip malls. Everything that is not residential, we're doing it.
Mhm.
that is based on real estate. So if you have deals, we have buyers. We can put you, through our buyers. So I send a list with properties sometimes that other wholesalers give it to me, and I help them to sell them. So anything related to real estate, we're here to help you.
That's awesome. And the last question that I've gotten so far is how do I get started? So I'll go ahead and give you guys information as to how do you guys get started with me, and then Antonio has a different process, but it's pretty much the same, website. If you guys want to go ahead and get started, keep in mind that it's a very simple process. You go to my website. In this case, it's www.efunding experts.com/get started, or simply just go to that website. I'm actually typing it in as we speak and on the chat for those of you guys that are still in here on the chat. But if not, I'm going to go ahead and send out an email with this recording to everyone that attended. And also I'll be posting this one on Facebook, and we also have a list for Antonio. So he'll be sending this out. But you want to go to efundingexperts.com and fill out a request form. And the form is very simple. It just gives us more information as to what you're looking for, how much money you're looking for, tell us more about you. And it's a very simple process. Once you submit that form, one of my representatives or myself will reach out so we can get a chance to know what is it that you're trying to do, how can we help you, how are we structuring this deal with you and perhaps even Antonio, so we can put it together like good puzzle pieces. And once that happens, all I need is a copy of your credit report. The report is really important because it gives us all the insights that we need. We don't require to do a hard pull in order for us to get you access to a quote or to tell you whether or not you qualify, and also how much money you qualify. So you guys, if you guys are even just interested in learning what you have access to, go ahead and go to the website as efundingexperts.com and fill out the form, and then we'll contact you so you can send us your report. And then once that happens, I'll give you a quote, and then you'll know exactly how much either gap money you're looking or you can qualify for, or how much down payment money you can qualify for. And if you know anybody that's interested in getting access to money, whether it's real estate or, like I said, any other business, including startups, we can help them as well because the same process applies to them. If you feel more comfortable in speaking with me, you can contact me directly. My phone number is 847-302-8302. And again, it's 847-302-8302. So why don't you go ahead and share your process, Antonio, as to how do people get started? How do they contact you?
Okay, so like I was saying when had to get started. The first thing is I want to know more about them. What did they do? What did they have? But I just want to know if they have the down payment, if they have the credit. So if they do, I can then give them an approval letter. So I need a pre-application or an application. They can go to my website, to the investorfunding.com, investorfunding.com, or they can call me directly. If they have a specific question, they can call me. My cell phone number is 630-640-9060, or they can shoot me an email, and I can send them the application. My email is antonio@investorfunding.org, antonio@investorfunding.org, and we can send them an application and we can start that way. So, we're here to help everybody. And like I said, we've done it. I think everybody can do it.
And just to kind of clarify, Antonio's website is www.investorfunding.com or www.investorfunding.org. Make sure that you include the THE before then, because otherwise that's not Antonio. But yeah, you guys, thank you so much for attending. Thank you so much for participating. And we are looking forward to working with you guys. I would love to receive a call from you guys. If you have a question, don't feel like if you don't have a deal yet, you can call us if you have a question about how to structure or anything that we might have said during this Zoom virtual event, you definitely want to reach out and ask us directly, because that's what we're here. We build relationships, because you may not be ready to move forward right now per se, but guess what? A month from now, 2 months from now, 3 months from now, perhaps even a year or two, then you'll be ready. And feel free to reach out to Antonio. Again, my phone number is 847-302-8302. And Antonio's number, can you repeat it again, please?
Yeah, my number is 630-640-9060. And like Jose, I'm on the phone most of the days, and I talk to a lot of people. And, sometimes they just call me to ask me, hey, what I can do, if I don't have 20%, or, just any question, give us a call. We're open 9 to 5 or 6 or 7 or 9 sometimes. So just, or text us, give us, send me a text or something. And like I say, we're open to help you. And I mean, we want to see your business grow. I think a lot of people these days, they want to do something different. Um, Freedom is something that everybody's looking, and you want to have the freedom to do on your terms, whatever you want.
Right.
So I think real estate is one of the ways to build wealth and to get, freedom. So um,
Absolutely. And yeah, and you couldn't have said it better, than that, because you got to stay hungry, you guys. Just like my good friend Les Brown says, you got to be hungry. And that's the part where we have to go ahead and go after these deals and get started today. So I'm really glad that you guys were able to attend this particular virtual event. We're going to be having way more. Antonio and I are looking at our next one and what are some of the topics, because remember, this is a process, and this process doesn't end with one call. It doesn't end with it actually goes along in many years to come, because you're building a portfolio. And guess what? The industry changes all the time. So we're always on top of the market. We're here to share that information so that we can help you guys out. And if you guys have any questions, just feel free to reach out. Thank you so much, you guys. I'm looking forward to doing a lot of business with you and sharing a lot more knowledge in our next event. Just stay tuned for our emails and also for our podcasts that we will, this particular event is recorded. So I'll send everybody a link via email as well. And I'll send it over to Antonio for those of you guys that are registered under his email list.
Thank you guys for
All right.
attending this, and I hope we can see you, with your first deal in the next 90 days. So thank you for being here, and thank you, Jose, for hosting this. I think a lot of people need it, especially now.
Absolutely. Thank you, guys. All right. Well, stay safe and have a good one. I'll talk to you guys soon. Oh, again, my number again is 847-302-8302. All right. All right. Sounds good. I'm going to go ahead and end this now, and looking forward to it. Talk to you guys soon.
Bye bye.